Today, I want to talk about the hedge fund that's just collapsed as a result of shorting AMC. This fund took on significant losses back in 2021, and it seems they couldn't make back those losses nor close out of their short position, and as a result, have just gone bankrupt. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Boss Blunt's tweeted saying O'Day Asset Management is to close down, and he's explained the story in 3 parts. He said part 1 is to take out a massive short position on AMC. Part 2 is to incur massive losses in borrowing fees and rack up further unrealised losses. And part 3 is to go bankrupt and shut down the fund. Back in August of 2021, O'Day Asset Management started a new short position in AMC. But by September, just 1 month later, it wasn't going too well for them, as they announced they suffered a massive loss over the last month, saying AMC has seen a dramatic reversal in fortunes amid a mind-boggling retail-driven stock price rally, and it continues to inflict crippling damage on its detractors. And it said the hedge fund O'Day Asset Management has emerged as one of the most prominent casualties in recent times, as AMC Entertainment shares maintained their inexplorable upward trajectory. And we can see that just a couple of weeks ago, O'Day Asset Management have now looked to shut down their wealth business. You'll notice from the articles O'Day Asset Management are trying to claim that they're closing down after harassment charges or harassment accusations against its founder. But as Boss Blunt points out, these charges or these accusations arose in 2021. And he said if that were the reason, why would they wait 2 years to shut down the fund after everyone's forgot about the charges and forgot about the accusations? What's more likely is the reason they're closing down the fund is due to O'Day Asset Management's significant losses. It says in the article, at its peak, O'Day Asset Management managed $13.3 billion, but with just $3.8 billion under its control last year. O'Day Asset Management has lost nearly 75% of its firm, or around $10 billion, as a result of poor trades, maybe just from shorting AMC, but maybe from shorting other stocks as well. And interestingly, some FCA probes are underway into O'Day Asset Management. The FCA, or Financial Conduct Authority, is the UK's version of the US's SEC. So obviously O'Day Asset Management are now being investigated for doing something rather sketchy. Some of you may say, Tom, if O'Day Asset Management started shorting AMC back in 2021, wouldn't they be sat on massive unrealised gains by now, right? As the stock has dropped so much. And my answer to that would be those unrealised gains were pointless because they couldn't close out of that short position and they had to continue paying those borrowing fees. So any unrealised gains they've generated over the last 2 years have now disappeared due to those 1000+% borrowing fees. We know that a maximum gain a short seller can make on their short position is 100%. Even if they had been holding their short since August of 2021, they may only be up, say, 97 or 98%. But after just a few months of paying 1000% plus borrowing fees, that 97% gain disappears very, very quickly. In fact, it would have gone to zero after just about a month and a half. So even if O'Day Asset Management did make an additional $10 billion from shorting AMC, that $10 billion very quickly evaporated because they couldn't close out of that short. And obviously we know the shorts can't close out because it would cause the squeeze by closing out of billions of synthetic shares all at once. On top of that, you may have seen this video on live TV of a reporter explaining that something in the market is breaking, and that something he muttered is Citadel. Now, if you haven't seen the video, I will play it in a second, but what I really wanted to focus on is something after he let slip about Citadel breaking, and what it reminded me of something that happened a few years ago.
A lot of the mid-90s period. I mean, it really truly does. To me, it's just my opinion.
I don't know what I'm talking about, and it does.
Things are breaking offshore. I mean, I say it all the time. In frontier markets that no one cares about, like Nigeria, Kenya, Ghana, currencies have been devalued by 50%. Things are breaking, but we just don't feel it here yet. And so...
Well, I mean, if you're going to talk about something breaking, always the gloom. He was basically leading it off.
I don't like to think so, Citadel. No, I'm kidding. I'm joking. I never said that. But what I would say is, look, there are big firms out there that are not necessarily your traditional hedge funds, your traditional banks, your traditional players, non-bank financial institutions, whatever you want to call it, shadow banking, etc. Yeah, there could be some pockets of distress that bubble to the surface when things get really tight. And I think what we're seeing in cross-asset vol right now, Lisa, is the market valuations are finally responding to tight financial conditions. First thing I'm saying is I have to apologize to Ken Griffin because Citadel's a wonderful company and they employ a lot of my friends and they invest really well. And I just want to apologize. I just got this vision of Ken Griffin calling me now. Anyway, no, I'm kidding. So the question.
So right there we heard this reporter on live TV saying that something in the market is breaking. That glue that tries to glue the market together, aka Citadel, is breaking. He said in times of market stress, over-leveraged entities like Citadel are at significant risk and could end up breaking not just themselves, but the entire market. But then at the end there, he very quickly and profusely apologised not just to Citadel, but Ken Griffin, and was worried about receiving a call from Ken himself. As Shay pointed out, he said the fact that he said Ken Griffin might call me now shows how Ken Griffin is eager to polish his image and how he is so aggressive with those trying to paint the real picture of Ken Griffin's distressed company. And that reminds me of this video that first reappeared a couple of years ago about how Jim Cramer couldn't say anything negative about Citadel. Jim Cramer admitted that he must continuously lie and cannot talk negative of Citadel, or he will come down on him. Jim Cramer has said about how Citadel, of course, is always in the best possible circumstance, and how Citadel is great, how Ken Griffin is great, and nothing bad ever happens to Ken Griffin or Citadel. But then basically said that he always has to be positive about Citadel and he can never spread any negative news whatsoever about Citadel or Ken Griffin. I also wanted to quickly recap today's Nvidia options play in the Millionaire Mindset Trading Group, which, if you held all the way to its peak, would have generated over 135% returns. In the group, I called this 408-409 level, which was yesterday's high of day and also the pre-market high for Nvidia. And at the market open, it blew straight through this pre-market high, giving us that confirmation and continuation. Nvidia itself ran from that 408-409 level up to 415 before pulling back, and then later on in the day it ran again all the way to that 420 level. And looking at the option specifically, it opened at $3.40. It then ran to highs of $5.85 before pulling back and running again all the way to $8.05 per options contract. Holding all the way from 340 up to 805 would have generated over 135% returns. And you can join the Millionaire Mindset Trading Group using the link in the description below. Today is the best day to join as it's currently the first of the month, meaning you get a full month of risk-free group access with the 100% guaranteed refund if you don't make a profitable trade.
Your piece on Citadel, very interesting. How conclusive?
Citadel's absolutely in great shape.
It is, but how conclusive
I just want to make that point right up top.
Okay.
They're in great shape. As a matter of fact, I want to throw money at them. If I were allowed to put money with them, anybody who's down 35%, the most important thing to do is throw money at them.
So when I see the New York Times with stories about
Well,
the
they're
health,
in great shape.
Why?
Well, because
Besides
they said
the
so.
35%.
They said they're in great shape.
But so Citigroup said they were in great shape.
Well,
a lot of banks said
Citadel's
they were in
different.
great shape.
See, this is how it works.
Yeah.
See, this is the way it's played. And guys like me can't even say anything other than they're in great shape.
Yeah.
Because then I don't get in trouble.
Yeah.
Right? See, when you're put on an outfit like Citadel, the important thing is not get in trouble. That's why I continue to tell you they're in great shape. Now, if I told you they're in great shape 50 times, what's the takeaway? Thank you.
Yeah, they're in great shape.
Yeah, they're in great
The
shape.
end.
See, because you can't talk about a Citadel.
To me, it's so crazy how scared these reporters are of Citadel Securities and Ken Griffin. Both Jim Cramer and whoever this guy is were absolutely petrified. They're trying to let slip on live TV that Citadel is actually not in great shape and they're actually breaking, but they're petrified. And that's why, as Crypto Collide tweeted, he said there's a reason why Ken Griffin is hiding his stolen money in a $1 billion home in the state of Florida, where bankruptcy laws protect one's property. That's because Citadel is indeed breaking and is in fact not okay, and that's why Ken needs to hide his money. And that's why, as Biotech Moose has tweeted saying, did you know that actually selling counterfeit shares with fake locates or creating synthetics is actually a Class C felony? It's securities fraud and it's punishable with jail time. This tweet says it's time to put the firms that are lending shares under the microscope. If they don't own a real share to lend or don't locate a real share to lend, then they may be guilty of selling counterfeit shares, which is a Class C felony and it's a violation of SEC laws. And that's securities fraud, punishable with up to 20 years in prison and up to $5 million in fines. So it seems like actually Citadel is in fact not okay, they are in fact breaking, and maybe Ken is just about to collapse. You may say, Tom, Citadel and Ken Griffin are fine. They just announced record profits last year, and Ken has just announced the construction of $1 billion home. But that's why Hang Loose has tweeted saying the whispers of Citadel being at risk of crumbling have now hit live television. And this is big, saying people behind the scenes know what's coming. They're trying to warn everyday retail investors on live TV, but they're also desperately scared of Ken Griffin and Citadel Securities. He's trying to paint this picture like everything is rosy, dandy, and that he's fine, but actually he's not fine and he's actually breaking. And it's great that actually people are now trying to talk out. They haven't yet started whistleblowing, but they're trying to whistleblow on live television. This, in some senses, you could agree, could actually be better, because it means the public and everybody out there watching television is aware of just how poorly Citadel is performing. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.